Well, Infometrics economist Brad Olsen joins me now. OK, Brad, we've heard how this rise in inflation is affecting growers. What does it mean for someone who's, say, 30 years old, saving to buy a first home at some point?
Look, this inflation figure, 6.9%, the highest in a generation, is going to be incredibly difficult for that 30-year-old who's trying to save up, because they're having to spend so much more on just trying to, keep a roof over their head, put fuel in the car, put food on the table. Trying to get through those essential costs, those day-to-day living costs, means that there's not nearly as much left over to try and save. And so for every step forward with any additional money you might have coming in, you're probably taking 2 steps back in terms of just how high those costs are going. When we have a look at it, you're talking roughly $100 more a week in terms of some of those key household costs coming out of someone's wallet. At the same time, you're probably not, well, most people are certainly not earning that much more additional each week. And so very much the difficulty now with those very high levels of inflation and the risk that they continue for a lot longer is that you find people that struggle to make ends meet, that are struggling to have a family budget that actually matches up, and they're not able to get ahead with their savings goals and look to that next big opportunity.
Brad, $100, I mean, that's a lot of money. Do you have any tips for us about how to reduce some of this pressure on our bank accounts?
Look, I think the major one at the moment is that people, if they don't already have a budget, will be wanting to put something together and reevaluate what they've got. What costs need to go out first in terms of, again, it's usually going to be your rent or your mortgage, your food costs, your fuel and similar, and what effectively has to get cut. What doesn't make the list when it comes to that family budget? Where does that $100 come from to fund the essentials? But importantly as well, I think Kiwis will be shopping around a lot more, looking at the various deals they can get, driving less because of how high those fuel costs and similar have gotten, thinking about, well, maybe public transport is a better option at the moment. But overall, we know that households haven't been doing it particularly easy in recent times anyway. They continue to assess their budgets. Realistically, something has got to be on the chopping block. Something will not get paid for.
So what happens now? I mean, will inflation keep going up?
I think it will, and that 6.9% figure today, a little bit softer than we had expected. The market was picking 7.1%. Our pick at Infometrics was 7.4%. Looking into the details, the government's reduction of fuel excise duty and free or half-price public transport rather has limited just how high inflation has gone today. In our minds, the Russian invasion of Ukraine, the higher commodity prices we're seeing globally, the very intense level of domestic inflation here in New Zealand is all going to continue to roar upwards. We think it could peak at 7.6%. And in my mind, it doesn't go away very quickly given all of the disruptions, given the supply chains are still wrecked globally and could get worse with the Chinese lockdown still going on. So no real good news realistically here today for households. In fact, probably given that it wasn't quite as high today as we thought, very much more inflation to come. The Reserve Bank will continue to want to act aggressively to increase the official cash rate. So it is going to be a real challenge going forward for households.
Oh, well, Brad, all the same, thank you so much for joining us.